Let's bring in an authority on big tech and AI. Hedge fund manager Dan Niles is the founder of Niles Investment Management. Dan, of course, was a semiconductor and computer hardware analyst during the dot-com bubble, a famed one, in fact. Dan, always great to see you. Thank you for joining us. I know at the beginning of the year you took a very defensive stand relative to some of other market participants. Cash was your best position. You weren't in any of the Mag 7 names, and that seems like an amazing call at this point. Are you closer to reallocating to Mag 7 at this point? Or no, there's still a lot more that you need to see?
So I think you need to look at it from a very big picture standpoint, which is if you think about what drives the S&P 500, there's really only two things, right? It's multiples and it's earnings. Right now, S&P earnings are forecasted, official forecast is up over 10% year over year. I sincerely doubt that's going to occur. That number is probably close to low single digits and maybe flattish. So you know that's coming lower. Second piece is obviously the multiple. And you've got the trailing PE for the S&P at 23 times. Coming into the year, we said, with inflation between 2.5% to 3%, the average is normally 19 times. I don't think we're going to get a recession, but if you do, that multiple is closer to the mid-teens. So, the multiple's got to go down. So then you move to the Mag 7, which is the question you asked me, Melissa. And if you look at it dispassionately, the numbers for 4 out of the 7 Mag 7 have been coming down since the middle of last year. And that is Microsoft, Amazon, and Apple. And then Tesla's numbers have been coming down since, the year before, but that's obviously a different beast. So estimates have been coming down. And if you look at the Mag 7, when they reported their calendar Q4s, 6 of the 7 companies had their forward revenue estimates go down. That's before all of this tariff stuff started to kick in. So things had already started to weaken on a fundamental basis. Now, the good news, as you said, is if you look at NVIDIA, the stock went down 49% from its peak to its trough. Tesla was worse. And so a lot of these things have corrected. And by the way, the 4 companies that are going to report, I think all of them are going to beat revenues, beat EPS, beat margins, and probably that should be good enough. But then you look at Google and you go, the stock's up less than 1% after having done all of those things. And so you wonder, are investors really thinking forward to the next leg of this, which is, yeah, that's because demand has been pulled in and we're going to have to pay that back sometime later this year. And so I'm going to actually start to think a little bit further ahead.